Want to see someone systematically disprove everything you have read about trading stocks and expose how and why you will consistently lose money if you aren't doing it right? Click the link in the description to check it out for yourself. But now for today's video.
The question, how do you pick stocks for intraday trade? Answer by Mahi Raghuvanshi. In stock market there's so many investor and trader who follow different risk appetite for which their working pattern is different. Intraday trading is the most common strategy followed by the market participants, where an individual trade with the focus of receive short-term benefit of the market. In intraday trading, an individual work with proper stop loss and target to manage the risk in market. Intraday trading is an trading pattern where an individual buy and sell the stock on same day. Intraday trading. In intraday, and trader receive the benefit of both trend bullish as well as bearish. Like if the trend is bullish, you will buy the stock at lower price and sell it at higher price, while trend is bearish, then you will sell the stock at higher price, then to square off the position you will purchase it at lower price. Short sell is an exchange intraday mechanism where you sell those assets that you doesn't own. There are so mainly two types of trading that in general investor or trader follow. For example, suppose XYZ limited share open at 102/ and after some time the price of share comes at 98/ here. If you buy at 102/ then you may lose. While if you sell at 102 and buy it at 98/, the difference would be your profit. Risk appetite can be defined as the amount and type of risk that an individual investor or trader is willing to take in order to meet their strategic objectives. In market, risk is directly proportional to reward. An individual expecting to receive higher return than the risk associated with that investment also would be high. So it is better to work according to proper risk appetite through which we can receive better return. How to invest or trade. Understood the market phenomenon. Select trading strategy intraday/positional. Evaluate your individual risk appetite. Ways to capital. Stock market tips. Free share tips. Stock tips. Answer by wealth buildup. Intraday trading is more hazardous on the off chance that you're untrained. But if you have an eye for spotting market trends, you can make a slick heap in snappy intraday bargains. To prevail in intra-exchanging, specialized examination assumes a vital part. Specialized investigation is done based on chronicled value development plotted on a two-dimensional chart. Chart perusing is an unequivocal aptitude, and on the off chance that you need to be a decent informal investor, at that point you will need to put in some genuine screen time. It takes a ton of training to end up plainly proficient at treading outlines, and I trust the most essential part of this is watching how graphs respond to specific occasions. This is the thing that I have had the most success with amid my chance, and in my brain, this is the key behind anticipating future price moves. There are numerous parameters to investigate, showcase, utilizing which you need to land at your own particular strategies. To choose which parameters suit you the best, some vital parameters are recorded beneath. 1. Moving average. You just need to plot the 200-day moving normal on the price graph. At the point when the cost of a stock transcends the moving normal line, it's a purchase flag, and when the value falls underneath the moving normal line, it is an offer signal. One can likewise look the 50-day moving normal or the 10-day moving normal. 2. Trend line. Pattern lines are a vital apparatus in technical analysis for both pattern distinguishing proof and affirmation. A pattern line is a straight line that interfaces at least two value focuses and afterwards stretches out into the future to act as a line of help or protection. An appropriate pattern line needs to associate two or more pinnacles or troughs. Uptrend line. An uptrend line has a positive slope and is shaped by associating two of all the more low focuses. The second low must be higher than the first for the line to have a positive slope. Uptrend lines act as help and demonstrate that net request less supply is increase in Jevon as the cost rises. Downtrend line. A down pattern line has a negative slope and is shaped by interfacing at least two high points. The second high must be lower than the first for the line to have a negative incline. Down pattern lines act as protection and show that net supply. 3. Pivot levels. The turn is the most vital level. At the point when the market is above the rotate, it's a bullish flag, and when the market is underneath the pivot, it's bearish. Accordingly, a few dealers will just purchase when the market is above the turn, and they will just take short exchanges when the market is beneath the pivot. There are a few unique techniques for ascertaining turn focuses, the most widely recognized of which is the 5-point framework. This framework utilizes the earlier days high, low and close, along with 2 help levels and 2 protection levels, totaling 5 cost points to infer a turn point. Wealth Buildup Financial Services. Answer by Piyush Pandey. I trade on the basis of volatility and news. While trading volatile stocks, you are ready to buy at low rates and sell at high. Risk is more while going with volatile stocks. Strategy is must needed. While using news for intraday trades, you must know what's the aim of the company and how people will react the news. Your psychology is must needed.